Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really interesting one for you. We're going to be joined by the CEO of Marathon Digital Holdings, Fred Thiel, to talk about his organization and provide an update on this company. Now Marathon is one we've covered on the channel previously, actually a couple of times, and this is one I'm really excited about as they're the biggest player or one of the biggest players in the Bitcoin mining space. Now before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of Marathon, how you think they stack up to some of the other miners we cover on the channel, and what your outlook is for the price of Bitcoin in the back half of 2023. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got a special guest for you, Fred Thiel. He's the chairman and CEO of Marathon Digital Holdings. This is a big one in the Bitcoin mining space. It's a company we've covered on the channel previously, and we're excited to talk to Fred about their strategy moving into next year's halving event. So Fred, thanks so much for being with us here today.
Great to be here.
So to kick things off, maybe for people who are unfamiliar with yourself and Marathon, can you give us a little bit of background in terms of your history and how you ended up at this organization?
Sure. I've been in the tech industry for 40 plus years at this point. Started writing software for a bank in the city of London when I was in high school in London, and worked as an intern, then worked in kind of almost every sector of tech: super mini computers, the PC industry, datacom industry, storage industry, digital media, digital games, networking, semiconductors, internet software, enterprise software, etc. Ran a fund for a private equity firm investing in software, started a venture firm, and have sat on lots of boards and advised lots of investors, PE firms and others in the technology space. I got involved with crypto back in 2015, 2016, looking at building a trading platform in Europe, first in Switzerland, then in Liechtenstein, to take advantage of kind of the arbitrage opportunities that existed across markets back then. And almost at the same time, a good friend of mine was tasked with, he joined a company called Marathon Patent Group in 2017 and was tasked with kind of getting it into the mining business or trying to do something around crypto. And so he asked me to join the board in 2018. And, we started really first having to restructure the balance sheet of the company. It was a micro cap, almost insolvent, had a great core patent, which is the underlying patent for kind of Siri and Alexa. Apple had paid a license, and the company had then gone and sued Amazon for similar reasons that they had settled the license with Apple, but that court case just dragged on and on and on and on, still going on today, and they ran out of money, so they decided to shift. And so my predecessor, Mariko Komodo, had to figure out how to recapitalize the company. And once he had done that, we started very small. We started a mining operation up in Quebec, third-party hosted, a handful of miners. It was in an old industrial building, and when they turned on all the miners, all the loose paint flakes that were on the walls got sucked into the miners. So they had a major mess on their hands. So that was kind of the beginning. And then fast forward to kind of 2019 and early 2020, and we kind of restructured the balance sheet, started raising money, and started buying a lot of miners from Bitmain primarily in those days. And in 2020, placed a very large order for about 70,000 miners, which was a huge order back in those days. And then proceeded to get those miners deployed, and then placed an even bigger order in 2021. So I think between 2020 and 2021 raised almost a total of kind of almost $2 billion in capital. Wow. Today we have about 21 exahash of installed capacity. We're just on the cusp of kind of hitting the 23 exahash goal that we had set out for ourselves. And we have operations in Texas, North Dakota, Nebraska, and the United Arab Emirates as well.
Excellent. So it's safe to say you've come a long way, I guess, both personally and since since sucking the paint chips off the wall, I suppose, eh, Fred?
Yeah, absolutely.
Excellent. So I want to talk about that joint venture in Abu Dhabi, and I wanted to get an update on the operations. What would you say currently differentiates Marathon from the others in this space?
So one big differentiation is we're a diversified miner. And by that, I mean we diversify across multiple sites in multiple regions of the world. So if you look at, for example, Riot, very concentrated in Texas, they own and operate their own facilities. You look at Core, they own and operate their own facilities across different locations. We use a combination of third-party hosting as well as owned and operated sites around the world, essentially. And as we continue to grow, we'll continue to diversify both regionally and globally, as well as increase our owned and operated percentage of what we do until there's kind of a balance between third-party hosted, owned and operated, US and international. That's one differentiation. The other major differentiation is we are technology kind of different in that we have a fully vertically integrated technology stack. We operate our own pool, which is based on software we've created. We have our own firmware in our miners that we run. We have our own controller board technology. We have worked with immersion vendors to customize immersion technology specifically to our needs. And we're doing a lot of things in the world of dual phase immersion and other places. If you look at our UAE site, this is a site that a lot of people have failed mining in UAE. It's very hot. It's over 45 degrees C. Most miners actually fail if they're air cooled above 40 degrees C, and you have high humidity. And so we did a pilot in the fall of last year where our pilot site ran for over 100 days without an engineer having to touch any miners. So that told us that we had kind of cracked the mold on how to operate a site there with very little intervention from humans and very low maintenance. And so we were able to close the partnership with our partners who essentially are backed by the sovereign wealth fund of the country, ADQ. We signed that deal in Q1 and the first miners went operational there this month. And so that site will be fully operational, or it's actually two sites, a 50 megawatt site and a 200 megawatt site. Both of those sites will be fully operational, by the end of this year. And right now it's progressing really nicely. And so we really like the relationship there. And it's an example of what happens when we bring our kind of design expertise, technology expertise, and work together with a partner who has great power pricing and the ability to deploy capital.
Sure. Yeah, and I imagine there's a number of reasons you wanted to go into the United Arab Emirates. What are the main ones? Like, is it a tax benefit? Is it access to the lower cost energy? What was the main draw in getting involved over there?
So there are a number of reasons. The energy environment there, if you would, they have an asymmetric need for energy. And what I mean by that is in the summertime, they consume about 4 gigawatts of power, primarily around things like air conditioning and cooling. In the wintertime, they only consume about a gigawatt of power. That means there's this asymmetric opportunity for waste power, if you would, stranded energy. The other thing is they use the heat offtake from their energy generation to purify seawater, which they use for all their potable water. So they do desalination. And so they need to keep the energy generation running because that's part of what does the desal. And so that was another reason for them to need to find an offtake for that energy. And lastly, they subsidize electricity to their population. And so if there was a way that they could instead monetize this stranded energy so that the government wasn't having to pay out a subsidy, but they would be able to maintain the low energy cost to the populace, that would be a win. So by partnering with us, we were able to kind of tick all those boxes for them, essentially. Consume all the stranded energy, allow them to not have to subsidize out of the government treasury, and at the same time, keep the power running for the desal without wasting anything.
Sure.
So it was a win-win in that regard. So we were able to get, fixed price energy and really strike a great deal there. And for us, it was kind of an opportunity to really test our technology stack in a very hostile, climate environment. So if we could do it in Abu Dhabi with the high heat and high humidity, then we could do it anywhere. We can do it in Africa, we can do it in Asia, we can do it, Texas, obviously, other places like that. So we think we have a great technology solution and a very diversified portfolio, which makes us a little less susceptible to geographic risks. For example, if you have all your miners in Texas and you have issues with either heat in Texas or you have issues with curtailment in Texas, that's going to affect you pretty heavily. So that's why we believe that you need to be diversified geographically, you need to be diversified based on the type of technologies you're using, and you need to be diversified also based on your power sources. So.
Agreed. Yeah, I'm glad you added some color there, because a lot of people at surface level, you think, yeah, Bitcoin's very energy intensive. It creates a lot of heat. Why on earth would you want to go to the desert? And I appreciate the context there. And definitely, if you can make it there, you're pretty safe anywhere, I'd say, Fred. Now, in terms of the diversification, I definitely think that is a real plus for your company. You talked about some of the hosting compared to like owning and operating your own sites and being vertically integrated in that sense. There's definitely bulls and bears on both sides of the fence. Some people love the hosting. The main benefit there, I guess, is CapEx expenditure. Some people really love the vertically integrated. So why have you decided to do both?
So we started using third-party hosting because we didn't have a lot of capital and we wanted to grow as fast as we could. And so we had done a site in Hardin, Montana back in 2020, which was attached to, it was behind the meter at a coal-fired plant. And there, what we realized was we spent about 35, almost 40% of the capital on infrastructure. And then the rest was on miners. And when you think about the cycles in this industry, you have a technology cycle that's about 5 years, meaning you're going to swap out your miners every 5 years, or if not sooner. You have this transition from air-cooled to immersion, and who knows what the next step in this is going to be. We believe it's dual-phase immersion from single-phase immersion. So you have a pretty heavy capital spend every 5 years in that you're replacing miners and you're having to redo infrastructure. So if you're building sites and you're going to spend 30 or 40% of your CapEx on building sites, that's 30 or 40% capital less to spend on miners. And we wanted to grow quickly because this is a business of diminishing returns relative to counting in Bitcoin, right? Because every 4 years we have a halving. The faster we could grow hash rate, the faster we could get online, the faster we could harvest Bitcoin. And in a market where the price of Bitcoin is going up, your cost of hosting becomes less and less critical. It's only in a down market or a winter market where that cost of hosting is critical. But what a lot of people don't realize when they look at miners who are vertically integrated, if you look at Riot, for example, and you look at how they treat their cost of mining, their hosting business is basically a break-even business, but their own mining is profitable. Now, you could say that they may be allocating incorrectly between the businesses, SG&A, and things like that. But when you look at a vertically integrated miner, what you have to realize is the depreciation of the cost of building that site is being done over typically a longer period of time than just the miners, right? The miners, you're depreciating 3 to 5 years. The site, you may be depreciating over 20 years. Well, the site doesn't really last 20 years. You're going to have to redo your technology. So if you spend 30% of your CapEx on immersion technology and 5 years later you have to change that out, well, that's now another piece of capital. So we viewed it to be agile and move quickly, grow quickly. Let's use third-party hosting as a way to do that, because and if you think about it, let's just say your cost of energy is 3-4 cents a kilowatt hour. And then your cost to host with a third party is 2 cents, maybe 2.5 cents. Well, if you look at what your cost to build a site is and then depreciate it over time, it may very well be 2 cents anyway. So we kind of thought, okay, let's do this. Let's focus on growing faster initially. And then once we have critical mass and we're up there as one of the biggest miners, then let's look at really deploying and building our own sites. Because we'll have more time to do it, because building your sites takes 12 to 18 months versus finding a hosting partner, which may be 6 months. Plus, we'll have learned a lot more and we'll be smarter. And so that's why you're now seeing us kind of expanding what we do to include owned and operated. And as you look further down the road, what becomes really interesting is becoming much more focused on energy generation. How do you generate energy so you get to zero cost? energy for your mining, right? That's the holy grail in this business. If you can get your energy costs to zero, and you can do that by owning renewable, then selling renewable energy credits and offsets, et cetera. If you can get your energy cost to zero, then halving cycles have very little impact on you. And the price of Bitcoin has less impact on you. So that's kind of where we're looking.
Yeah, no, great context there, Fred. And I think it makes sense. And speaking of scale and critical mass, I know you guys, you mentioned a little bit earlier, actually, I think you hit 21.8 exahash installed last month. What does that mean to you? And do you feel you're close to that critical mass now?
Yeah, I mean, at this point, of the publicly traded miners, we're on the cusp of kind of eclipsing, I think, Core for self-mining production. If it doesn't happen this month, it'll happen next month, most probably. And so at that point, we become the biggest self-miner of the publicly traded miners. Granted, there are privately held miners like Genesis Digital Assets and others who are potentially bigger. Nobody knows because they don't report numbers. But at least of the publicly traded miners, we'll be the one producing the most Bitcoin. So at the same time, we have a very lean SG&A. Even with over 21 exahash installed, we're still under 50 employees. We are a very lean operation when you look at it from a headcount perspective. Riot has hundreds and hundreds of employees. Core has hundreds and hundreds of employees. We don't have that overhead. What that means is that we also have a lot of flexibility. So if the market has a sudden downturn, we have a lot of different flexibility than what some of those large, fully vertically integrated miners have. And so again, it gets to this, how do you remain agile, but how do you have resilience? And this is one of the reasons why we've been also building our balance sheet. We got rid of all of our short-term debt last year. We've built obviously a hoard of Bitcoin, over 12,000 Bitcoin on the balance sheet. We have a lot of cash on the balance sheet today. And, we don't have, if you look at our convertible bond, it doesn't expire until the end of 2026, and it has 1% interest, so it doesn't cost us a lot to maintain. And so, we're in a position where we have the ability to take advantage of a lot of opportunities, and we can move very quickly, where for other miners, that's not the case. It's not easy to raise money today unless you're big like Riot or ourselves, right? It's not easy to, necessarily fund your growth strategies. So, I think what we're going to see is a consolidation post-halving here of miners around the bigger guys. It'll be a very interesting marketplace, depending on what Bitcoin does. If Bitcoin is at 60, 70,000 at the halving, then, everybody's just going to keep trying to grow. If Bitcoin's at 30,000 or 40,000, it's a different story. That's like Bitcoin at 15,000 today. So it'll be very interesting.
You mentioned your stack there in excess of 12,000 Bitcoin, I think 12,500 and change. What is your guys' HODL strategy moving into the halving then?
So no different than what we've done all this year, which is we essentially sell Bitcoin to cover our operating expenses. So to pay for energy, pay for hosting, pay for salaries, et cetera, and then HODL the rest. And again, you kind of can see, whatever we're HODLing, that's essentially profit, right? A way to look at it. Yeah. And so, we have the benefit right now that Bitcoin's been moving in the right direction as our Bitcoin holdings have been growing. So it has this kind of compounding effect, which has been great. And, we look forward to being in a really good position as we go into the halving to weather, whatever storms or great weather and momentum, whether it's rising tides or sinking tides, we're very well positioned. We think.
Great. Yeah, I'm hoping the storm is behind us and we're moving into the rising tide scenario personally, and I'm sure you are as well. Now, I know we've covered a lot of ground in today's discussion, Fred. We've talked about the joint ventures, the operations of the company, the capacity. What would you say, in your opinion, is the number one focus of the organization moving into halving?
So it's a couple of things. We had two goals this year, which were energize and optimize, meaning energize all the capacity we had contracted, get that lit up. And then the other was optimize our existing sites to get to a place where we're producing Bitcoin at, as low a cost as possible by maximizing uptime and leveraging our technology stack. What we're now starting to focus on is also diversifying. So how do we continue to diversify our sites, our partners, our locations, and also the technologies we're using? Because we believe that there's another technology shift that's going to happen here over the next 3 or 4 years, which is this move away from your traditional shoebox miner to more of a blade-based miner that's fully immersion or fully liquid cooled. And so we're beginning to experiment with a lot of those technologies. So I think what you're going to see from our side is not just expansion within the mining technology space, but also technologies that are adjacent to mining that we think are going to be very complementary over time.
Gotcha. And that's the HPC and the AI stuff that we've started to see come out more and more in this community, hey?
Yeah, I don't think you're going to see us do what Hut 8 and Applied are doing relative to hosting HPC. When you look at that business, there's this initial demand for, I got to get capacity up so I can get my LLMs going. Well, the hosting business will always move towards the marginal cost of operating. And so the profits will start decreasing. It's hugely capital intensive. You have a similar dynamic to Bitcoin mining, which is you have only 1 or 2 people that make the core CPUs or GPUs that you're using. And so you've got this restrictive thing. And, being old, like I am, I remember the PC industry when it was still exploding. And it used to be when the clone technologies first came out, people that were copying the IBM PC and building their own PCs. If you could get Intel processors, yeah, you could make a lot of money. But what ended up happening is the large OEMs, the Dells, et cetera, they started doing deals with Intel so that they would get the latest technology and the third-party guys would get the former generation technology. And so, we're big believers in the fact that in the AI market, you're going to see the big boys dominate this. It just makes sense. You just got to give them 6 to 12 months. And if your capital cycle to payback break even is 2 or 3 years, that's a lot of risk. Right? So we think there are more interesting plays in the HPC AI space that don't have to do with operating hosting sites, but rather have to do with providing them with technology. And I'll kind of leave it like that as a teaser, but more importantly, because we haven't talked about it publicly. So just think about it that, it's like Levi Strauss, right? Sell picks and shovels to gold miners, don't go out and mine gold. So we think that, infrastructure and technology for that space is going to be much more interesting than operating hosting sites, because we think that's going to commoditize over time.
Yeah, I love that analogy. Okay, well then we'll leave that as a teaser, Fred, for next time. That gives you a good reason to come back. Thanks so much for your time today. I really appreciate it. Guys, if you're still watching the video at this point, make sure you hit the like button, subscribe to the channel if you're not already. And if we didn't touch on any of the points or questions that maybe you have for Fred and the team, make sure you leave them in the comments and we'll get them answered next time we have Fred on. So I guess last question, where can people get more information? What's the best way to reach you and kind of stay updated with the company?
Sure. So our website is mara.com, MARA.com. Easy to find us. Lots of great information on the website. I'm on Twitter, FGTHIEL. And otherwise, just reach out to us on our website and be happy to answer any questions.
Amazing. Okay, thanks so much for the discussion today, Fred. We'll talk to you soon and have a great rest of your day.